Yeah, so we have 40% of the Dow reporting, 1/3 of the S&P, and all three of the trillion-dollar tech companies. You know, we're back above 24,000 for the Dow, and the S&P is just 17% away from record highs. Once again, the reason a lot of this money has gone into big tech. $251 billion has rotated into these names just in the past week, and that is a record number, by the way. So yes, a lot of these big names will be reporting this week, and so far from the 25% of the companies that reported for the S&P, they have actually come out ahead in profit. 65% have beaten. Also, we do have earnings down 20% from last year, pretty much anticipated, but sales are doing better than expected as well. But I say with a lot of these big tech names, I think there's a lot of distortion in the first quarter. It's pretty much baked in. It's pretty tough in the first 3 months of this year. Will we get any guidance forward? So far, Cowen says for Apple, they probably won't give us any. I think that's an indication as to the other big tech names as well. But that hasn't stopped, by the way, the explosive recovery in these stock prices.
Did you say $256 billion, a quarter of a trillion, flowed into big tech in
1 week?
In 1 week?
Yes, that's right. That's a record amount. And so people are just looking forward and ahead to that so-called V-shaped recovery.
Yeah, big tech's going to do quite well, and that's why futures are up this morning.
Yeah, relative to the rest, I guess, because this is the biggest week for earnings. We have 40% of the Dow components reporting results. A third of the S&P, and the biggest of the big companies out there will be coming out with results. So Google, Apple, Amazon, Facebook, Alphabet, as we call it as well. And we'll throw in a Tesla and some Starbucks as well. So far, you know, we've had 65% of S&P companies beating on earnings, but we do look at profit being down so far for the quarter, down some close to 20% from last year. But I guess if there's a silver lining, sales have come out better than expected. But earnings are looked at as less reliable these days. There's a bit of a distortion effect, obviously, with the stay-at-home orders. Also, there's a lot of central bank stimulus that has been priced in as well. Yes, we have sales falling at this point, but some are still looking for some recovery in the back half of this year, given that we have these benchmarks just 15% away from record highs once again.
How about that? Susan, I notice on the screen there, Apple is up a fraction this morning, up 40 cents at 283. Don't they have an iPhone production delay announced today?
That's according to the Wall Street Journal. So the Wall Street Journal is reporting this morning that it looks like they will, I guess, delay their mass production of the next generation iPhones by just about a month. So they're still looking at 4 handsets, according to the Wall Street Journal, being released in the September-October period. Some will be 5G. You have 3 sizes, OLED screens. And don't forget that iPhones still account for more than 50% of Apple sales. Now, for the first time since 2015, in the past year, they failed to ship 200 million of their flagship devices. But it's not like we haven't seen this before. For instance, back in 2017, remember the iPhone X or 10, as you want to call it? It was delayed because there were some production glitches. Eventually, they got it out in November of that year. And most analysts say it doesn't matter when they release the iPhones as long as it's before the all-important holiday shopping period, which is still likely at this point.
Yeah, it doesn't matter when you release it.
President Trump says that Tim Cook, the head of Apple, shares his view that there's going to be a quick bounce back in the U.S. economy in the back half of this year. Listen.
Well, I just spoke with Tim Cook of Apple, and he would like us to do things. He's going to be spending tremendous amounts of money in our country. He's going to be bringing back tens of billions of dollars into our country. He's going to build, and he feels that we're going to have a V. You know what the V is? We're talking about the U or the V, or maybe a flat line, but he thinks it's going to be a V. That's his own impression, and he's had some pretty good impressions.
Now, Cook is, of course, one of the business leaders that President Trump has tapped for his White House economic panel, and they have a close working relationship. Some would say Tim Cook was probably one of the first in Silicon Valley to engage with the White House, and we know that jobs has been something that both of them have been, shall we say, in alliance with in creating new jobs in the U.S. So Apple says that they will invest $350 billion in the economy by the year 2023. They're on track for that. They have 90,000 employees across the U.S. They support 450,000 manufacturing and operation jobs. And when one of the most influential tech CEOs on the planet says we're going to get a V, not a U, I think you have to listen to that.
Yeah, absolutely. The man leads the most dynamic country in America, if not the world. And when he says a V,
Yeah.
That's very good news for the
I
economy.
do want to caveat this. This is important. I did ask Apple to confirm this, and they said we have no comment.
Okay. You wouldn't comment on a conversation between the CEO.
You have to look past it. You know, we read reports this morning from Cowen saying that Apple, for instance, reporting on Thursday, will not be giving guidance for the next quarter ahead. And that might be something that we are anticipating for most of these tech companies, since it's such a fluid, distorted market that we're in. For instance, sales have fallen off a cliff. Also, you have a lot of central bank stimulus as well. But all $3 trillion companies, and that's Apple, Microsoft, and Amazon, will be reporting this week. So far, we've seen, I guess, a beat when it comes to profits, since from what I see, 65% on the S&P has actually reported better than expected profit. And sales have come out a little bit better as well. But look, we're bleeding a lot from last year. From what I see, down some 20% in earnings from 2019.
Okay, but so far pre-market,
5,000 cars in the second quarter of this year. First quarter, they're looking to make 88,000 cars in Q1. And if they come out ahead of those numbers, you can bet that this stock will continue to rocket. Also, reports that it looks like workers might be coming back to work at the Fremont factory in California starting this Wednesday. And by the way, Ken Griffin of Citadel, one of the most influential hedge funds in the world, he revealed a 4% passive stake in Tesla on Friday. So when you have Ken Griffin backing you, you get a lot of pop in the stock. Also, I should mention, by the way, Stu, you know, Tesla's sitting at $100 and close to $35 billion in market cap. That's 3 times General Motors and Ford combined.
Yeah, I find that incredible. 3 times the combined value of General Motors and Ford. Who would have thought that?
Well,
Susan?
okay, first of all, we have earnings this week as well. But some are hoping that maybe Fremont, which is their main production facility, will be reopened pretty soon, hopefully this week, because we have plant leaders sending out messages to workers in the Fremont factory, those working in paint and stamping, asking them to confirm whether or not they can return to work as early as this Wednesday. But there's a problem, because that would go in defiance of California's shelter-in-place order, which extends to May the 3rd. Now, Tesla is arguing that they should reopen Fremont because it's an essential business. They want to characterize it as national critical infrastructure under the Department of Homeland Security. But California has said, and the Alameda County Health has determined that actually keeping the plant open is a health risk, and there will be misdemeanor fines if they, I guess, go against that shelter-in-place order. So we'll see.
Yeah, we will, but it's
signed a 5-year deal to work with Coca-Cola, so that's a half-a-decade deal. Now, Teams is Microsoft's answer to Slack, which is this corporate chat software. And there's been a bit of criticism over the weekend about Microsoft and its focus on producing and competing with Slack with its Teams software. Because don't forget, Microsoft could have been the leader in video conferencing. They paid $8.5 billion for Skype back in 2011, but instead, you've seen Zoom lead the pack. 300 million daily active users now, and that's up from the 10 million at the end of last year. So companies like Microsoft feel that they have missed out on this, and a lot of people are gunning for Zoom and going after their lunch. We have Facebook announcing Messenger Rooms being launched last week, right? And this is up to 50 people can chat on Facebook's Facebook Messenger, and a lot of people feel that they should have been the leader. There were a lot of products out there before Zoom, right? WebEx from Cisco. You also had, I believe, Google Meets as well. But for some reason, Zoom seems to be easy to use and the, I guess, video conference of choice.
Well, I guess Microsoft had to come up with their own version of Zoom. And because the virus hit us so quickly and so hard, I guess it took a while to get this Teams thing going. But it is now going, I believe. And as you say, Coke's
well, no, they had Skype in 2011. So Skype is a video conference technology and the service. Teams is more for Slack. So the focus was too much on Slack and Teams instead of Zoom and video conferencing.
I think I follow you, Susan, but with great difficulty. But there you go. It's just me. Don't worry.
But there are some bright spots. For instance, China has started processing more oil. They've lifted off their February lows because the economy has reopened after trying to contain COVID-19. And don't forget, China is the largest buyer of oil since the U.S. produces their own and uses their own oil. So if China's buying more oil, I think that might set a floor to oil prices. But who knows? You still have the possibility of going negative, at least for the near term and the near term months.
Well, we've got an oil analyst
Illustration of the global oil glut. So as you see on your screen here, this is the scene just off Long Beach. 24 of these oil tankers off the LA coast, and that's because there's nowhere to put it. The tankers can't offload the crude that are sitting in this near football field size tankers that you see floating there off the ocean. But look at the oil price today. You know what's the problem is, of course, yes, the oil glut, but we still have 10 million, close to 9.6 million barrels that are coming off global markets this Friday because of the OPEC cuts. And some say U.S. production still needs to be cut another 10 million barrels. Otherwise, you're looking at possibly another month of negative oil prices. We saw that in May, unprecedented, and some say June might follow. And then what happens in July and August? But one silver lining, as I mentioned to you, it looks like we've lifted off the floors for China oil demand.
Yeah, that's interesting, but I still question whether or not we can get way, way, way down again for the price overall.
Possible.
I think it is. But look, hold on a second. 1 second, soon. I got Andy
So
Lippau.
Starbucks is now co-investing with Sequoia, which is one of the gold-branded venture capital firms in the world. And in China, it's held by the #1 ranked venture capitalist now for the last 3 years running. His name is Neil Shun. He's made some pretty astute investments. And when they said to, I guess, co-invest in these retail technologies and next-generation food technologies, there's a company called Meituan Dianping, which is worth $600 billion. It's the biggest food deliverer in China, something that you may not have heard of. But Sequoia is very good at making these type of investments. And given that Starbucks has China as its #2 market in the world, building one store every 15 hours, I think this is pretty smart.
And Luckin, they're being investigated by the government of Beijing. And so that helps Starbucks, I guess, because Luckin's a competitor for them.
That's right. Video conference screening for some of these merchants that want to sell on the website, and that's because they want to prevent counterfeits from being sold. So far, around 1,000 merchant applicants based in China, the U.S., UK, Japan have been verified through this process. And the reason why they're doing this is because they want to counter counterfeits. And that's one reason which has discouraged large brand names like Apple and Nike from selling on the website. And there have been cases where China-based sellers have registered multiple accounts using private internet networks or fake utility bills. And they're concerned that 40% of the top 10,000 merchants listed in the on the European side are from China, according to market research. So let's make sure that these goods are not fake.
Okay, I understand that.